Every single day you wait to start investing is costing you. Your money is losing value, the market is moving without you, and compounding returns are slipping through your fingers. Too many Kiwis think they need to save up thousands before they can begin, and by the time they realize the truth, they've missed years of potential growth. In this video, I'll show you exactly how to start investing in the NZ stock market with as little as $50, how to make smart choices with your first investments, and how those small steps can lead to massive returns over time. This is the information you'll wish you had years from today. Is widely considered a good strategy. Now, before you start investing, there's one very important thing you need to keep in mind, because if you get this wrong, you could lose all of your money. Choosing the wrong investment strategy could leave your $50 sitting idle or even shrinking, while picking the right one could see you set up for serious growth. Let's break down exactly where beginners should start in the NZ stock market. Active investing is all about picking individual stocks or investments and trying to outperform the market. It sounds exciting. The idea of finding the next big winner can be tempting, but here's the reality. Even professional fund managers who are paid hundreds of thousands of dollars or even millions of dollars per year to analyze the market and make perfect calls often struggle to consistently beat the market. Timing the right entry and exit point is extremely challenging, even for experts. For a beginner with limited experience and just $50 to start, the risk of picking the wrong investment, wasting time, or losing money is much higher. Active investing can also be incredibly time-consuming, requiring hours of research, tracking financial news, and monitoring market movements, not to mention the stress that comes with it. This is why passive investing considers starting point for beginners. By investing in broad market indexes or diversified ETFs and holding them for the long term, you remove the guesswork and reduce the risk of costly mistakes. Passive investing is low effort, low cost, and historically delivers consistent growth over time. You don't need to be a market expert, and you don't need to spend hours researching the individual companies. Even with a small amount of money, you can start building a portfolio that grows steadily without the stress and time demands of active investing. For beginners, this approach is often the smartest, a popular way to get started in the stock market. The most important thing is simply to get started, even if it's just $50 a week. Putting money into the market, gaining confidence, and gradually building your portfolio over time is what really matters. ETFs inherently provide diversification by holding shares across dozens or even hundreds of companies, reducing reliance on any single stock or sector. This can be especially helpful for new investors who may not have the time or expertise to research individual companies, or for those wishing to avoid the volatility that can come with stock picking. It's a long-term strategy, best viewed as a supplement to traditional savings rather than a short-term profit opportunity. What's most encouraging is that even small, consistent investments can regularly accumulate into substantial passive income over time. Now that you understand investing strategy, it's just as important to know where to put your money. Choosing the wrong stock could seriously hurt your portfolio. In this video, I'll also show you a powerful strategy that only requires $50 a week and has the potential to deliver life-changing results over time. Next up, you need to find a place to actually buy your shares. Picking the right broker is critical because not all platforms are created equal. Choosing the wrong one could mean missing out on valuable features that help you make better investments, potentially producing higher returns, and access to a wider range of stocks. Your brokerage platform is basically the app or website where all your buying and selling happens. It's your money's home base. In this video, we'll be using the Moomoo platform to show you how to get started. Moomoo is a global platform that lets you trade US and international stocks easily and comes with low fees and advanced tools for those who want to take investing a bit more seriously. We'll keep things simple and accessible. Whether you're a complete beginner or just want to dip your toes into the market, Moomoo has you covered. There are other options too, like Sharesies, Hatch, and Stake. Each has its own fee structure, range of companies, and overall vibe. It's like picking a streaming service. They all sound similar until until you dig into the details and realize one could be costing you more than you expected. So how to buy stocks with Moomoo. Alright, so you want to buy some stocks. Well, let's say you've got your eye on Apple. No, not the fruit, the tech giant. So first, search for the company, Apple in this case, and click on the stocks listing. You'll see all sorts of juicy details like how much the stock's going for right now and any price changes it's currently had. The P ratio, that's fancy talk for price to earnings, but don't worry about that lingo, and any dividends they might dish out. You can also check out their price over different periods, whether it's for the last day, month, or even year, so you can get the vibe of how the stock's been behaving. Now scroll down a bit and hit that shiny buy button. You'll be hit with a few options. If you go for the market order, it will let you buy at the current market price. No messing around, just straight to the point. But trust me, go for the market order. This one's your best when you're getting started because it lets you buy at the current market price. Once you've clicked the market order, you'll need to decide how you want to invest. You can either pick the number of shares you want to buy if you're feeling fancy, or just type in how much NZD you want to spend. For example, let's say you've got 100 New Zealand dollars, just type that in and you're good to go. Less maths, more investing, and you've entered your amount. Smash that buy button and your order will be processed. The shares will show up in your account within 1 to 2 business days. Just a heads up, if you're buying when the US stock market's closed, like weekends or holidays, there could be a bit of a delay, so don't panic. Also remember, we're on a different time zone here in New Zealand, so things might not always line up perfectly with when the US stock market opens. If you're ready to start building your portfolio with Moomoo, you're in luck. They've got a ton of awesome features like low fee investing. You can trade US stocks and ETFs starting at just 99 US cents per trade, Excel, other pass-through fees and FX costs. While AU stocks cost from AUD 4.99 per trade, it also has some useful functions, for example, free Morningstar research and AI-powered features like AI stock insights for daily moves and AI announcement summaries that turn long reports into 10-second briefs with the original attached. With Moomoo, you can easily access some of the top performing stocks worldwide and even use a nifty paper trading option so you can practice without risking your hard-earned cash. So if you want the full lowdown on how to make the most of this platform, don't forget to check out this video on screen for a super detailed step-by-step guide.